As it relates to retirement savings, you've probably heard the term Roth, whether it be Roth IRA, Roth 401k, Roth 403b, and it's probably been a positive thing when you've heard this, because after all, Roth accounts, when handled properly, are tax-free forever. Traditional IRA or a traditional 401k, on the other hand, typically has pre-tax dollars in it, meaning distributions are fully taxable. Well, if there's tax, that means less money for you. So if you're looking at two accounts, and let's say they both show up as an identical value on a statement. One is an IRA, one is a Roth IRA. You look at the statement, it's like the exact same value when you look at the statement. Yeah, the value is the same, yes, but reality, one has an embedded tax cost. Yep, the traditional IRA versus a Roth IRA. So the traditional IRA has an embedded tax cost. So even though the value on the statement looks the same, in reality, to you, probably not the same. Well, I'm Oliver Kolofsky, Director of Wealth Services and Wealth Advisor at Sweet Financial Partners, located in Fairmont and Jackson, Minnesota. We specialize in working with high net worth people who are at or nearing retirement. We believe that everyone has the right to realize that their dreams are possible and use that as the focus when working with you and helping you plan for your future. The other day, I was meeting with a couple, and both of whom had just retired. So we were working on optimizing their monthly income as it relates to taxes, also coordinating with Social Security income. So the good news for them, they had money in both Roth and traditional IRAs, giving them or us the flexibility to choose, of course, with our guidance, how much income to take for a given year for each account type. So a lot of things we can't control, like the weather, for example, but we can control as it relates to the weather, how we are proactive or how we react. So for instance, if it's going to be sunny, maybe I'll be sure to have sunglasses on hand, or prior to winter, I'll have the snowblower ready to go. Well, similar type of concept with the financial markets. You and I have no control over the up or down movements of the stock market, for instance, but you and I absolutely have control from which account to take income and when. So going back to the topic of the video. So do Roth conversions impact my ability to make Roth IRA contributions? So to properly answer this question, we need to define a few terms. So let's break it down. So Roth conversions, what is that? That is the act of moving money from a pre-tax account to a Roth account. So let's use IRAs in this instance. That would be taking a set dollar amount, and moving it from your IRA, your traditional IRA, to your Roth IRA. Let's just use a dollar amount. Let's say $20,000. We're going to move $20,000 from a traditional IRA to a Roth IRA. That's a taxable event. That $20,000 that we're moving from the IRA to the Roth IRA, that's going to need to be reported as ordinary income on your tax return for that particular year. And once it's in the Roth, then if handled properly, it's tax-free forever. So all the future growth would be tax-free forever, to go to the next generation, tax-free. So there's no dollar amount. Sometimes we get the question, is there a dollar amount that I can convert, a limit, if you will, to convert from an IRA to a Roth IRA in a given year? The answer is no. There's no dollar amount cap, if you will, or no minimum. So a Roth conversion, that is moving money from an IRA to a Roth IRA. Anyone can do it, regardless of how high or how low your income is. You can do it, and you may do any dollar amount. No minimum, no maximum. We've defined Roth conversion. Now let's define Roth IRA contributions. A few more stipulations for that to happen, or for you to be able to do that. One, you need to have earned income for the year. So if you're retired and you have no earned income, you can certainly do a Roth conversion, but you are not allowed to make a Roth IRA contribution. So you have to have earned income. Think of earned income as income from working. So it's like not a pension. It would not be a distribution from an account. It would be income from working. Also, Roth IRA contribution. If your income is of a certain amount, you are not allowed to make a Roth IRA contribution in a certain year. So if your adjusted gross income is over a certain dollar amount, I'm not going to get into the dollar amounts here because it's different whether you're single or married filing jointly, but if your income is too high, you are not allowed to make a Roth IRA contribution. But let's make a pretty big distinction here, a little bit of a sidetrack or a tangent. So if your income's too high, not allowed to make a Roth IRA contribution. You are allowed to do a Roth conversion. Remember, we said Roth conversion, income can be anything, and there's no minimum and no maximum to be able to do a Roth conversion. But here's a little, I don't call it a loophole, but so a Roth 401k, no income limit. Income can be whatever it is, and you are able to contribute to a Roth 401k. So that would be through your employer. Roth IRA, again, if your income is too high, not allowed to do a Roth IRA contribution. All right, a lot of moving parts there. So if we go back to the question, do Roth conversions impact my ability to make Roth IRA contributions? The answer is no. Yep, we get this question a lot of misconception here. If you do a Roth conversion because you're trying to optimize a certain tax bracket, if you're trying to optimize the 12 or the 24 federal marginal bracket, you'd rather pay tax now at a known rate as opposed to down the road when you believe maybe tax rates will be higher or you'll be in a higher tax bracket. So Roth conversions, you can go ahead and do a Roth conversion. And if your income is under that threshold, yes, you are able to make Roth IRA contributions for that year. So the Roth conversion, as long as it doesn't put you over the income limit for Roth contributions, you can still make a Roth contribution. How about the opposite though? If I make a Roth contribution first, can I still do a Roth conversion? The answer is yes. And we mentioned the Roth 401k. That's a key thing. I'm going to mention that again as we begin to wrap up here, because a Roth 401k is a great way to get a lot of money into a Roth account. You get a Roth tax-free forever. You don't get the tax deduction up front, but if handled properly, a Roth is tax-free forever. A Roth IRA, if your income's too high, you can't get money into the Roth through contributions. Roth 401k, no income limit. You can put money into your Roth 401k. So to learn more about Roth IRAs, click here to watch a presentation I did live last summer called Roth Strategies Uncovered, where I go much more in detail regarding the nuances of Roth accounts and most importantly, how they can help you. And I go through some practical planning applications.